135k, for example. £135,000 is the on a one-to-one cases, and there's no standard contracts that we can actually use. You don't need to deal with any tenants whatsoever, evictions or whatever else, any tenant problems, tenants' happiness, dogs in the house, whatever. And it's a win-win for both the seller, who actually cannot sell at the time, and the In this video, what we're going to do, we're going to discuss the lease option for a very simple reason, so that you as a seller, you as somebody who is going to actually sell the property, can actually understand the lease option to purchase agreement, which is actually used in the UK. So you understand its benefits and what it can do for you. So it's not going to be something that's scary. You understand why we investors go for it, what is in it for us and what is in it for you, and you understand also the financials of how this lease to purchase agreement works. And we're going to try and give you as many details as possible, but we're trying to actually give you in this video the basic financials, so that you understand the physics, so to speak, of how this works. So you understand the basics. So once you understand the basics, you understand the motive for us to actually spend even more money than we would actually do with a straight purchase, then going for a lease option agreement. And in this video, it's going to become quite apparent. So we're going to go in stages first of all. So what is in it for the seller and why? As we'll see very shortly in one example, basically in the lease option agreement, you've got two main parts. One is the rent that you receive from us, the investors, every month. And the other one is the agreed price at the end of the lease. Now, both the rent and the agreed price are negotiable. And also the length of the lease are also negotiable. It can be 5, 3, 10, 20 years, whatever we want to make it. But please bear in mind that the lease option agreement or lease to purchase agreement is a legally binding contract, where normally it obliges us investors to pay you monthly a certain amount. Obviously there's some break clauses and whatnot in order to protect something going wrong in these contracts. And also the other thing is, not as if there's actually standard contracts. Every contract is negotiated in individual cases, on a one-to-one cases, and there's no standard contracts that we can actually use and send over to you. We both sign it and off we go. No, you're going to have your legal representation. We're going to have our legal representation. It's normally paid by us investors. All in all, it's paid by us, so you do not feel that that financial burden. So it is a legally binding contract, and it's got the benefit to you that you actually get rid of the property effectively from the day when the lease starts. So all your responsibilities on the building in terms of insurance, upkeep, maintenance, dealing with tenants, repair, whatever else, getting the property up and compliant with regulations and whatnot, is all up to the investor in the lease option agreement. So there's a very fundamental difference between a rent that you receive from a tenant and a rent you receive under a lease option agreement. A rent from a tenant, you are responsible for loads more for the building, maintenance, boilers goes down and whatever else, mortgage payments, whatever else you're normally responsible for, all compliance with legislation, licensing, if you've got selective licensing, whatever else. Whereas in this case, you actually pretty much give up all your responsibility, almost as if you actually sold the house when the lease starts, and that's one of the benefits you get. So it's not a normal rent, and for this, as we'll see shortly, normally the rent is lower because us investors have got to make sure that we're going to be able to rent the property profitably and cover the maintenance costs. If we've got to upgrade the property, we can do so. Also, another reason for the contract to be binding is so that we investors are protected in case we're actually going to do an upgrade and then down the line we are unable to actually purchase the house from you and we have lost that money. So the contract is legally binding. Another very important point is that with the lease option agreement, you actually, in all cases, I'd say 99.99999%, you get always more money than a normal sale. Why is that? For two reasons. Number one, you get the monthly income from the house that is still in your name, and in the registry, in the land registry, is still in your name, the company's name, whatever. And you're getting the rent, and on top of it, at the end of the lease, then the leaseholder is encouraged to buy it. Another very important point is the leaseholder has got the option to buy, not the obligation. But mind you, if the work has been done well and you're dealing with a professional investor that know their stuff, then they're extremely likely to want to purchase the property from you at the end of the lease. And we're actually going to go why, because then in this video also you'll understand why we investors are very keen to get the house at the end of the lease. So how is it possible to make more cash from the lease option than a normal sale? So once again, I'll just repeat it again. In a normal sale, say for example, you're selling the market value, if you're lucky, the top market value is 135k for your building. You sell it, you get 135, you pay your solicitor fees, you pay whatever tax you owe to HMRC and whatnot, and then you keep the rest. If you've got paid the mortgage, you keep the rest. Whereas in this case, with the lease to rent option, the lease option agreement, then you get both rental income, and at the end of the lease, as we'll see, very likely you're going to get the sale at the agreed price. We understand why, although it's not an obligation, we're very interested to buy. We actually extremely encouraged to buy it. We're going to go into that. So you've got a higher amount of money getting from a lease option agreement, 100%. Also, the other point here, which must not be undermined, the difference between the lease option and the normal sale is that in the normal sale, you pay for your own solicitor's fees, and you pay for whatever estate agent's fees that you've got to sell. You've got to pay for. Whereas in this case, pretty much everything is negotiable in these lease agreements. However, mostly investors are keen to actually cover everything, and you'll understand very clearly why we're actually interested to do that. So all lawyer fees, there's two lawyers' fees in this case. There's the lawyer's fees at the beginning of the lease, where you've got your legal representation, we've got our legal representation, and we pay for it. And that's the way the lease option is enforceable at the end of the lease, when there is the option to purchase. And we will actually also explain why it's got to be enforceable for us to be able to buy the property. And then that's pretty much it. So you get also that added advantage, and you understand that it seems like magic, but it's not. You'll understand why it is so convenient for us to actually go and acquire property using a lease option agreement. Why, if it costs more, it is more effective for us investors. So I just put it down there so I remember that it's now the time to actually talk about that. Now, for you to understand, say for example, basically we investors make money out of owning a building and make it useful to other people. And normally, in order for us to own a building and a piece of real estate, depending on the type of real estate, we've got to use mortgages, because if we just use cash, we're not going to go really far. We've got to use mortgages, and the normal mortgages for buy-to-let in the UK at the moment is 75 loan to valuation. So every time we're actually going to buy something, we're going to fork out 25%, plus we're going to give out stamp duties, plus we're going to pay for solicitor fees, plus, in most cases, the property will require some degree of refurbishment, in most cases, and some work. So if we go down that route, the amount of capital that we've got to put up front is kind of high. That limits the amount of properties that we can own and control. Whereas the lease option agreement allows us investors to actually get in to a property, control it as if we own it, with very little money down. So when we actually get in, we don't have to pay the stamp duties, we only have to pay the solicitor fees, and we have to pay your rent. And whatever we need to do to the property, we can do legally. And we're responsible for everything, and we can start as soon as we finish with the due diligence of getting things right for the property. Then we can actually start make it work. So getting people in to pay rent and whatnot. This is the main reason. So with the lease option agreement, we are able to control and then own far more real estate that we can using the traditional way, by putting a lot of cash out and then remortgaging and whatnot. It's much faster that way, because it's less cash incentive at the beginning. So we can actually get the machine, because the piece of real estate is a machine, it's a cash flow machine. So we can actually get it up and running with much less cash to start with. Maybe we're actually going to make less cash during the lease option, maybe. However, it is an easier, faster way for us to actually get that particular house up and running. Now, why is it that we can do it and I'm not saying you cannot do it, but we are investors, we are actually able to do this because we've got experience and we've got the know-how, we've know the regulations, we've got know the legislation, we've got the experience about managing the houses and finding estate agents and get maintenance people and remotely control properties and manage them remotely. Say for example, I've had for now 10 years properties in Scotland, Nottingham and Lincoln, and other pieces of real estate all around the place. And I'm able, at the moment I'm actually shooting this video from China, I'm able to control everything using a computer and a Skype program. Is amazing. And I'm able to do that because I've got the experience and I've got the knowledge on how to do it. So if there's a problem arises, I'm on the phone, bang, I get maintenance people to actually go there and do the work. So I don't need to be there. So I've got the systems and the knowledge and the know-how to actually go and deal with problem properties remotely. So normally I'm actually at the property during a major work, a refurbishment, when things are capital intensive, but when the house is sorted out, I don't need to be there. I just deal with things remotely. I even also at the moment I'm actually selling a few houses onto my company. I'm doing this remotely as well. I do many things remotely. I get tenants remotely, move in, I check in and out tenants remotely, so I'm able to do that. If something breaks, I've got WhatsApp groups where the maintenance people are actually notified quite quickly. So we got things working quite well, and once things are set up, it's kind of a piece of cake for me. So for us, doing that is not a problem. I've got the energy and the know-how, whereas not everyone is actually willing and to get that knowledge and is willing to actually get into that, whereas I am very willing. I absolutely love this. So to me it's very easy, whereas it's not very easy to other types of people or other types of characters. So that's the main reason for it. So for us, we can actually take a problem property that to you can be a problem, or maybe you want to retire, you just had enough of it, you just want to get the cash out, whatever. or you live far away, it's more hassle, and you do not know how to actually sort it out yourself, and you want to get rid of it. Whereas we've got all the knowledge and we can actually resolve this problem more easily because we've got a different set of skills, talents and interests. So that is the main difference. So we're able to actually take the same thing and turn it around much more easily and profitably quicker. So the lease option agreement allows us to expand our property portfolio much faster with less cash. And to be fair, me as an investor, I would actually, when I've got 100k just out of my other businesses, bang, I'd rather use lease options to acquire more properties than using the traditional way, because I can actually control much more. Now, the other thing is, what you'll understand later on with an example in this video is that we're able to buy normally properties at undervalued price, although we're buying it at a price that is normally today's price or a bit higher, because maybe in your case something happened to the property, you cannot sell it as it is for any reason. Then we're able to actually raise the purchase price, and we're going to be able to buy it later on at lower price than then a normal market value. And this is extremely important to us because we are a business and we have to make money. There's nothing, there's no, how can I put it? There's no magic. Any business, one way or another, have got to be profitable, have got to cash flow positively, have got to make money on capital appreciation as well. And it's actually another strategy for us investors to make money then we buy the property from you. And we'll just show you a very quick example at the end of this video. Then, so yes, exactly. So the main reason for us to actually go for it is to get far more houses with less capital intensity, so to speak. So what is the guarantee that my house will be sold at the end of the agreement? I already mentioned it before, but we're going to actually show you with a practical example. That's going to become apparent to you. Basically, at the end of the lease agreement, if we have negotiated good lease agreement for both yourself and ourselves, by the end of the lease agreement, that price that we're going to purchase the property from you is going to be attractive. So if it's not attractive, we're not interested to buy the property from you. And please bear in mind, at the negotiation stages with us, we are doing this in order for then, when we buy the property, we've got an extremely highly likelihood to be able to buy your property at that time, at that moment in time, at a lower price than the market value at that time. Why is that essential? Otherwise, that deal is not good for us. And unfortunately, or fortunately, everyone is out there to be profitable also in capital gains. This is not a game of charity. This is a game of profits. So, but as you will see in the example we're going to show you just in a minute, you are also going to benefit from more money from this type of sale, and we are going to benefit as well at the end of it. So, and then the other question is, which I already touched on it, but I think is very, very important for you to understand. So why is you wouldn't do it, and we are very interested to do it. If I can put it in another example, when your car breaks down, now you've got two options. You've got two options. You do it yourself. You fix your car yourself, and it's going to be cheaper, but it's going to cost you far more in education and time, and maybe something that an experienced mechanic could actually do in 2 hours is going to take you 1 week for you to resolve, because you've got to study the engine, you've got to study whatever, you've got to go troubleshooting and whatnot. It's going to take you a long time. I just give you an example. I was refurbishing a house, I remember it was almost 10 years ago, which I still, of course, I still own, and had a fault in the circuitry. The RCD was tripping all the time. One of the trips tripped all the time, and I could not really get my head around it because I'm an electrical engineer and I couldn't really get my head around it. So I said to myself, and I was really stressed about it because I was thinking, well, maybe a nail's actually going through one of the cables or something of the sort, and I've got to strip everything out again. Oh my God, what do I do? I called an electrician I knew, and he came in. Then the following day, within I think half an hour or 1 hour, he found, while I was not there, I was at my place of work, he found out the fault, cleared it, and it was simply one of the plugs was actually, one of the screws was touching one of the, I think there was a short circuit between the earth and the neutral, which was done through one of the screws in the socket. So to me, I could have actually been there. I remember just pulling my hair out and just couldn't figure it out. An electrician has seen this sort of things before, had the right instruments, could actually resolve it really quickly. And it cost me much less to pay the electrician than me trying to fix that fault. So this is what I mean, is we are from the trade. So we know what to do, when to do it, and how to do it, and how to find the skills and how to actually get the machine to work. Whereas in your case, maybe this is not your skills. It could be much more time and capital intensive to you. You would need to go through a learning process which would be more expensive for you. So it's down to expertise. So we are the specialists, we know how to do it, we know we've got teams sometimes in place, or we know how to actually get teams in place really quickly. We know how to scout them and how to make them work, so we get things working much more easily. So that is the main reason for us to do it in new knots. So now we're going to go into the example, practical example. So basically I gave you the theory, so to speak. Basically the theory is, especially at the end of that lease option, when we finish paying the rent to you, what happens is the property has gone up in value because of something called inflation and something called maybe increased demand in the area, housing demand. That is something that you cannot control. But certainly there's inflation. Inflation always works. And it does not always work linearly. It depends on the price fluctuations. So that's not a straight answer. But we're going to go into this example, which is quite important that we understand. So let's go into an example of a house that at today's market value is 135k, for example. £135,000 is the top value that today that house can actually be sold for. Now, let's say you sell it at that. What you have to pay for is solicitor fees and your capital gains, if you've got capital gains, your mortgage off, and maybe the real estate agents. Now, in 5 years' time, the same property, it could, very likely, is not a given because basically the market goes through recessions, booms and busts. But let's assume on average should be worth a bit more. Let's say, for instance, 165k. This is not a given. That is likely a likely case. Say, for example, at the moment we're waiting for a market crash. Maybe in 5 years' time it's not going to be the case. So, but let's say is the case. And we as investors, in order to safeguard ourselves from it, then we try to negotiate a longer lease option. But anyway, we're going to talk into that. So let's say 5 years, the house is worth, on the open market, 165k, top value. So if you waited, then you actually get more money. So the longer you wait, the more cash you're able to sort of profit from it. You've got inflation, but anyway. If you wait 10 years, maybe, again a big maybe, the house is going to be worth 210k, maybe, top value. So this is the trend that the housing normally goes into over time into the open market. Now, so hopefully you do understand this. And why does this happen? This happens for two reasons. One is called inflation. So the value of money gets eroded by inflation. The governments keep printing money, so there's more money around, things cost more, and the same brick and mortar that was laid down 10 years ago now is worth more. So it's very simple. And demand. In certain parts of the UK, the demand is rising because of rising of population. With Brexit, we don't know, but whatever. Let's say the demand increases, the house prices increases because the demand increases. So you've got two things that play in this particular game. The demand is not a given, but the inflation is a given. So that is a must. And also market fluctuations, these are quite random, sort of random. There's one coming, there's a crash coming. And we all know about it. Anyway, we're not going to go into that. But then with the lease option, you've got a rent that we pay to you. Now, I want to emphasize once again that this rent is different from the rent that you get from tenants. And this rent is normally lower. Why is it lower? It's lower because the amount of responsibility that you take for this rent is pretty much very close to zero. Why is it close to zero? Because by the time when we actually take over the house, we're responsible for everything. We're responsible for making the house, if it needs to be, compliant with legislation. If it needs licensing, to get the license or renew the license if selective licensing applies. Maintenance, it is not your problem, it is our problem. Anything else, building insurance is our problem, not your problem. And basically, normally what happens in the lease option agreement, normally that rent covers for your interest mortgage payments. And that's what happens in most lease option agreements, depending on the type of house that you're selling. So you're getting an income from the house that you're selling under a lease option that is guaranteed for little or no risk, which is kind of very, very important. And you've got that guaranteed rent depending on the length of the lease. Say, for example, if we have it just for talk's sake, let's say that the guaranteed rent is for 50. Let's say, I'm just talking out of just as an example. The agreed lease is for 5 years. Then what you've got is what you get on top of your sales price at the end of the lease is 450 times 12 months times 5 years, which is a total of £27,000. Something you would never get in a normal sale. And normally that is something that's it depends, I'm not a tax advisor, but it depends on your circumstances. You've got little, not tax, depends on what you're doing with that money, if you're actually offsetting your mortgage or whatever else. Then let's say you've got a 10-year lease option instead of 5. All of a sudden you multiply that figure by 2, so you've got £54,000 on top. Instead of having 27, you've got more money for you. So that seems quite a magic thing, but yet we do make money as investors. And from our point of view, and my point of view, if the deal is right, I would rather get that length longer rather than quicker. The reason is because we can actually negotiate a below market value at the time of the sale. Now, it's quite important. I want to emphasize it again. So we rent from you, and you receive an income monthly, which is maintenance free. So you're not in charge for maintenance. You've got no responsibility that I know of about the house. You've got no building insurance to pay. You don't need to deal with any tenants whatsoever, evictions or whatever else, any tenant problems, tenants' happiness, dogs in the house, whatever. You don't need to deal with that. We deal with everything. So it's a very, very different deal you get. It's not a normal rent. And just I want to emphasize it again. At the end of that lease option, it would be crazy for us not to buy the house. We would not buy the house in two circumstances. Either we've gone nuts, or actually maybe three circumstances. One, we've gone nuts. Two, basically if we've went nuts, basically you've got your property back, which you can do whatever you want with it. Two, maybe the market has actually crashed for some very, very strange reason, extremely unlikely to happen. And maybe, and another thing, maybe the terms of the contract, that agreed sale is not a good deal at the time because the price was too high and the market hasn't recovered or whatever. So please bear in mind, at the end of the lease, if that sales price is not convenient, we would not go for it. So please understand, at the negotiation stages, we really want to be having a good deal for us when we come to buy the property from you. So please don't hold grudges if we're trying to get a good deal as well. So, but you do understand with this, basically, you are getting more money from your sale, and your sale is pretty much, it's not guaranteed by law because we've got, or by contract, because we've got the option or the obligation to buy. But then remember that if we've done a good job, we want to buy, 100% want to buy, because I don't go with a lease option agreement if I don't know that I'm going to be extremely motivated to buy at the end of the option. And remember, at the end of the option, we still have to come up with 25% of the loan to valuation, provided that the mortgage regulation at the time is the same. But another piece of knowledge for you is that another reason for us to actually love lease option agreements is from an investor's point of view. It is much easier for us to invest into a machine that is already working. Let me explain. If we buy a house, because at the end of let's put it this way, at the end of this lease option agreement, we still have to put down 25% of that agreed price in order to get a mortgage and get the house from you. We still have to pay for stamp duties and whatnot, and the lawyer actually even have to maybe pay for your lawyer as well. However, it's much better for us because for two reasons. One is that we are buying an asset which we really know ins and outs of. We have run for a number of years, have been actually cash flowing positively for us for a number of years, and we only need to get this transaction done and the finances sorted out to get the 25% and all the money. But we know that once we're finished with the transaction, and during the transaction, the cash keeps flowing, so it is good. And then once we've done everything else, then we can actually go do maybe some more work onto the house, refinance, and get all our money back and maybe some profit out of it. So hopefully in this video you did understand how the lease option agreement is in 99 out of 100 if you're not really crazy to get your money out of the house immediately, a better financial option for you. And then hopefully also you understand, so you understood how you can actually get more money. Say for example, in this particular example, in a 10-year lease, you're getting, on top of the sale, you're getting £54,000 over a long period of time. Something impossible with a straightforward sale. Whereas from our point of view, we are able to actually acquire more assets and control more assets, get more machines to work cash flow wise, then we would actually be able to do using the normal way, because we don't need to put the 25% up front and the pay for the stamp duty and everything up front and doing the works. After we've done the works and upgrade, then we can actually rent it out and refinance if we want to refinance. Whereas all this is done at the end of the lease, which is much better for us, because we are actually having an asset that we control and cash flows positively for us. And all we have to do is just do that transaction. While we do that transaction, the refurbishment, the basic refurbishment is already done. Finish that transaction. Then if we need to do something else in order to refinance, we can do that. But all of the while, the house is working, is cash flowing positively, and we don't have to actually fork out loads of cash up front, wait for the refurbishment, the big refurbishment to be finished in order to make it work, and then refinance. So it's less capital intensive, and we can actually get more properties in this way effectively and efficiently. So hopefully this actually clarified the mystery of the lease to purchase. And if you would like to know more, please get back in touch with us. And if you need more videos, more explanation, we can do so at our return. My name is Andreas Russo, and we like transparency. This is why we made this video, and we made it for you. So if somebody proposes a lease option agreement, that's not a scary thing. You hopefully know exactly how we make money, how you make more money, and how you can benefit and we benefit, and there's a win-win in both cases. So if you're not looking for a very quick sale, or you're actually another very important point is this actually, it works really well for people who actually fall in negative equities, because negative equities can actually be sorted out really easily with lease option agreements, and is a win-win for both the seller, who actually cannot sell at the time, and the investor.